In this video, we're going to talk about what happens next after resolving your IRS debt. What if I told you that settling your tax debt is just the beginning and that one misstep could put you right back in the IRS crosshairs? In this video, I will give you 3 important steps that you will need to get right to ensure that the IRS does not knock on your door again. Number 1, you must understand the terms of your resolution agreement. Whether you've negotiated an offer in compromise, set up an installment agreement, or received a penalty abatement, each comes with specific obligations you must adhere to. Let's review each. The first one, it's an offer in compromise. This is when the IRS allows you to settle your tax debt for less than the full amount you owe. Here, you must file and pay all taxes on time for the next 5 years. Failing to do so can default your agreement, reinstate the original debt amount, plus penalties and interest. Next, an installment agreement. This is when, if you're financially unable to pay your tax debt immediately, you can make monthly payments. You must know that missing a payment or filing late can lead to immediate termination of the agreement, prompting aggressive collection actions. The next one is a penalty abatement. This is, in simple terms, is a waiver or a reduction of tax fines and fees. And what you need to know here is that future compliance is often a condition. Non-compliance can result in reinstated penalties. Okay, so now what? What can you do to minimize your risk? Before we continue, make sure you like and subscribe. You must review your agreements carefully, mark all important dates on your calendar, and consider setting up automatic payments to avoid missing future obligations. Okay, let's move to number 2. You must implement a robust record keeping and timely tax filing. You must establish a strong system for record keeping and timely tax filing. Consistency is the key to staying away from the IRS. So how do you do that? You organize your financial documents. You keep all receipts, invoices, and financial statements well organized. This makes tax preparation smoother and ensures you're claiming all eligible deductions. Also, you should make quarterly estimated tax payments. If you're self-employed or have irregular income, remember to pay estimated taxes quarterly to avoid underpayment penalties. And here's a pro tip. Invest in an accounting software or hire a bookkeeper to help manage your finances effectively. Now let's move on to number 3. Stay proactive and informed about tax laws. You either do it yourself or hire a professional that takes classes every year to stay up to date in tax matters. Staying in compliance with the IRS does not have to feel like a full-time job. If you want someone that can help you and get you to a safe space free from the IRS, click on the link below to schedule a free and confidential consultation with me.